Last month, my cousin texted me a screenshot. It was a message from someone she went to high school with. "Hey girl, I'm building my own business and looking for ambitious people. Turn $500 into $10,000 per month from your phone. Interested?" 2 days later, my Uber driver told me he just enrolled in a $997 crypto trading course that promised to teach him the secrets Wall Street doesn't want you to know. That same week, I got a YouTube ad for a day trading bot, claiming their AI makes $300 a day on autopilot. My neighbor mentioned he'd signed up for an Amazon FBA program that guarantees you can quit your job in 90 days. And my brother-in-law showed me a sports betting app that uses data science to beat Vegas. 5 completely different pitches, 5 different industries. But here's what made me stop. They're not different at all. They're the exact same trap wearing different masks. And the scariest part, the math behind why they work on us is brutally simple. Make sure to hit that subscribe button and give this video a thumbs up if this helps you out. My name is Sam, and I spend way too much time deconstructing financial traps so you don't have to. Here's what nobody tells you. There's a formula. Every single easy money opportunity, whether it's MLM, crypto courses, dropshipping gurus, day trading systems, or affiliate marketing schemes, shares the exact same 5-pillar structure. Once you see it, you can't unsee it. Pillar 1, they sell the method, not the result. Think about this for a second. If someone actually had a trading algorithm that consistently makes $300 per day, why would they sell you the algorithm for $997? They just run it themselves and make $109,500 per year risk-free. The real money isn't in the method working. The real money is in selling the method. A study from the Direct Selling Association found that the average income for people running trading courses is higher than the average income of their students who actually trade. They make more teaching than doing. That should tell you everything. Pillar 2, fabricated social proof. Screenshots of bank accounts, Lamborghinis, student testimonials from people who happen to have brand new Instagram accounts with 47 followers. The FTC has documented that income claims in these industries are systematically misleading. Those success stories? They're either fake, cherry-picked from the 1% who got lucky, or they're people who make money recruiting others, not from the actual business model. Pillar 3, artificial urgency. Only 3 spots left in this cohort. The market window is closing. Price goes up at midnight. Behavioral economists at Harvard have shown that urgency is a neurological hijack. When you feel rushed, the prefrontal cortex, the part of your brain responsible for critical thinking, literally gets suppressed. Your limbic system takes over. You stop doing math and start making emotional decisions. They know this. The urgency isn't real, it's weaponized psychology. Pillar 4, hidden total cost. The $2,000 course is just the beginning. Then you need the premium software subscription, the advanced training module, the ads budget, the inventory, the mentorship program. A report analyzing side hustles found that 42% fail specifically because the actual cost of entry is 3 to 5 times what was advertised, and there's no real market demand. You think you're buying a $2,000 opportunity. You're actually signing up for a $10,000 plus commitment. Pillar 5, blame the victim. When it doesn't work and you want out, suddenly it's your fault. You didn't work hard enough. You didn't follow the system exactly. You gave up too early. This is the psychological insurance policy. It keeps you quiet. You don't warn others because you're ashamed. You think you failed, when the reality is the system was designed to extract money from you, not generate it for you. Let's look at the data across categories, because this isn't about one bad industry. This is systemic. The FTC analyzed 70 MLM income disclosure statements and found that 99% of participants lose money. Not don't get rich, actually lose money. In 2025, the FBI reported that Americans lost $333 million to Bitcoin ATM scams alone, a 53% increase from the previous year. That's not counting all the crypto courses and trading scams. When researchers studied side hustles, they discovered that 30 to 40% fail within the first 60 days. And the primary reason wasn't lack of effort. It was that there was no legitimate market for what they were taught to sell. Here's the pattern. Whether it's MLM, trading courses, dropshipping academies, or cryptocurrency opportunities, the failure rate is consistently above 90%. These aren't isolated bad actors. This is an industrial system optimized to sell hope, not results. You might be thinking, I'd never fall for that. But here's the thing. Daniel Kahneman won a Nobel Prize in economics for proving that all of us, regardless of intelligence, are predictably irrational with money. His research on prospect theory revealed something critical. Humans experience losses roughly twice as intensely as equivalent gains. This is called loss aversion, and it's hardwired into our neurology. Here's how the traps exploit it. They start with a small ask, $500, $1,000. That's painful, but manageable. Your brain categorizes it as acceptable risk. Then, once you're in, they progressively increase the commitment. Just invest a bit more in ads. Upgrade to the advanced training. And here's the trap. Because you've already invested, your brain screams that quitting now means accepting the loss. So you throw good money after bad. Behavioral economists call this the sunk cost fallacy. You keep investing not because the opportunity is good, but because admitting it was a mistake feels worse than continuing. And they layer on urgency, because Kahneman also showed that when people make decisions under time pressure, they rely on emotion and mental shortcuts instead of actual analysis. That 24-hour flash sale isn't about scarcity. It's about preventing you from doing the math. Let's do the math they're counting on you never doing. I'm going to use round numbers based on the statistical average across these traps. You see an opportunity. Could be a course, could be a business starter kit, could be a trading system. Here's what actually happens. What you spend. Initial investment, $3,000 for the course or system. Additional costs over 1 year, $2,000 for tools, ads, inventory, software, or coaching. Total cash out of pocket, $5,000. Time invested, 10 hours per week for 1 year. What you actually make. Based on the statistics we just covered, the average person makes about $500, if anything at all. Your direct loss. $5,000 spent minus $500 earned equals negative $4,500. You're in the red. But here's the part that nobody talks about. That's not the real cost. The money you don't have right now. If you had taken that $5,000 and put it in a boring S&P 500 index fund, after 1 year with the average 10% return, you'd have $5,500. But you don't. You have $500. That's a $5,000 gap in your actual wealth right now. The money you could have earned. You spent 10 hours a week for 52 weeks. That's 520 hours. If you had worked a basic part-time job at $20 per hour, which is very achievable in most US markets right now, you would have earned $10,400. Real money. Cash that could be sitting in your checking account today. Instead, you have $500. The money you'll never have. This is the brutal one. Let's say you're 30 years old. If you had invested that $5,000 in your Roth IRA and let it grow at 10% annually until you're 65, it becomes $140,000. That $3,000 course didn't cost you $3,000. It cost you $140,000 of your retirement. Add it up. You paid $5,000 to make $500. But the real cost was the $5,000 you could have invested, the $10,400 you could have earned, and the $140,000 you won't have in the future. That easy money opportunity actually cost you $155,400. That's not a typo. That's compound interest working against you instead of for you. So how do you protect yourself? I've built a 4-question filter that works for any easy money pitch you'll ever encounter. I call it the bullshit filter. Question 1, the revenue test. Where does their money actually come from? Do they make money from customers buying products or from people buying into the system? If the revenue model is recruit others who recruit others, you're not looking at a business. You're looking at a redistribution scheme where money flows up and you're at the bottom. Question 2, the proof inversion. If this method works so well, why are they selling it instead of just doing it? Think about it. A real competitive advantage is valuable because it's secret. If I actually had a system that consistently beat the stock market, the last thing I do is teach it to 1 million people for $997. I'd get investors, scale it quietly, and make billions. The fact that they're selling you the method is proof the method doesn't work. What works is selling the method. Question 3, the math check. What is the total all-in cost, including your time, and what is the documented success rate? Not the testimonials, the actual statistical success rate. If it's below 50%, you're not buying a business opportunity. You're buying a lottery ticket. And lottery tickets are fine if you treat them like entertainment, but you don't quit your job for a lottery ticket. Question 4. The urgency flag. Are you being rushed to decide? Real opportunities don't evaporate in 48 hours. I've been investing in index funds for years. Know how many times Vanguard sent me a countdown timer saying, invest now or this closes forever? 0 times. Urgency equals manipulation. When someone rushes you, they're trying to prevent you from thinking. Here's the truth they won't tell you. Boring money beats easy money 95% of the time. You want to increase your income? The highest probability path is increasing your value in your current field by 10 to 20% through a certification or skill upgrade, or finding a better paying job in the same industry. You want to build wealth? Consistent investing in low-cost index funds has a 95% plus success rate over 20-year periods. You want a side income? Learning a marketable freelance skill like copywriting, graphic design, or bookkeeping has an actual market with real buyers, not a pyramid of recruiters. The system sells you dreams because it can't sell you discipline. Dreams are scalable. Discipline isn't. A guru can sell the same course to 1 million people, but they can't make 1 million people do the boring work that actually builds wealth. The easy money industry is a $1 trillion ecosystem built on one insight. It's more profitable to sell the idea of getting rich than to help people actually get rich. You're not the customer. You're the product. Your hope is what they're monetizing. If this video helped you see your finances differently, smash that like button and subscribe for more content that challenges how you think about money. I'll see you in the next one.